Market goes up, market goes down, how do you really manage such a situation? And should you directly invest in stocks? Should you go through mutual funds? Should you go through index funds, active, passive? There are hundreds of stories going on around and people are really confused. What do they really need to do?
Hello and welcome back to Paisa Bolta Hai. मैं हूँ आपकी host Pradanjali Raval. We're so excited to introduce today's guest, Mr. Suhas Shetiya. He's a graduate from IIM-Bangalore and also registered investment advisor recognized by SEBI. Hello Suhas, thank you so much for joining us today. How are you feeling?
I'm feeling great. In a really nice place that we have here, and we're having a conversation. Always open for any financial discussion.
That sounds great. So the conversation is just getting started and we have a lot of questions for you. So what inspired you to start advisory services and focus on simplifying personal finance for millennials?
So what I have observed with years of work that I do in the corporate space, in fact I do a lot of work in corporate space as well, talking about finance for non-finance and so on and so forth. What I observed is, irrespective of your level in an organization, we have people who are just joined the organization, people who have 20, 30 years of service. Most of them have trouble saving, trouble investing, and a lot of them have been missold policies or whatever, which is really not advisable at any level in your career. So when I did all this work and I spoke to a lot of them would come back to me asking, Suhas, now that you talk to me about all these things, why don't you help us with our finances and so on and so forth. Then I realized there is a very, very important need in the market, and obviously a lot of them have made it really complex so that they can make money, but finally end individuals do not end up making money. So to clear off this kind of a gap, we started this company. We got an opportunity to work with a lot of millennials as well. So actually we have had opportunity to work with millennials and also people in their 50s. So we've got a wide range of clients, and in the process we've learned a lot about what needs have evolved from the times they were in the 60s to now. So there's a huge evolution that has happened, right. And making it simplified ensures that people are able to achieve their goals, and millennials hopefully want to retire too early. So it also helps them also to achieve it as fast as possible. So that's what inspired us. All that we have seen has inspired us to start this particular company.
Everyone, all of us face some challenges when it comes to managing money, right? How can they address them in advance? How can people like me or people like who are in audience who don't know how to manage the money, how can we address these issues in advance?
So let us take some of the examples you gave. Also, I'll look at some examples that I see on a day-to-day basis.
Sure.
Right? One is credit card. Now, credit card is a good thing or a bad thing? It's
depends
still,
on the usage.
Now, even without depending on the usage, now I'll give you an example. Okay, let's say I say this coffee mug cost you 200 rupees. Yeah. Okay, you go and swipe the card.
Yes.
And you pay for this mug for 200 rupees. Yeah. Other alternative is, instead of the card, you're carrying actually 200 rupees cash. Actually, you're carrying 500 rupee notes, and you give 200 rupees to the shopkeeper. Physically, when you do it, there's a pain of loss. You're losing something. So you actually feel you're losing something when you're giving actually cash. If you use credit card and you will observe your spending behavior, it will goes up because credit card actually summarizes all the pain to one day when you pay the cash, and that too, it's just a transaction in your account. Yeah. There's actually you won't feel the pain. So actually credit card, from a behavioral, and all these behavioral economics people keep talking about, from the behavioral studies have proven, credit card will ensure that you will end up spending a lot more than what you would have. So if you are having trouble saving, the first thing is cut your credit cards. Let me tell you, you will start saving money in 3 months.
Let's talk about retirement only. Is there something called peaceful retirement? What do you think? And if yes, what do you think is the secret?
So if you want to retire early and have a peaceful retirement, you need to keep your lifestyle in check. Is one of the ways to have a peaceful and easy retirement. Let's say I want to retire in a BMW. Yeah, you'll have to work a long time to retire. Yeah. If you're okay to retire in your regular sedan, then I think you can retire quite fast. It's only, I have to tell you, lifestyle is the main specific reason why people can't retire.
For peaceful retirement, it's very important to keep expenditure in check. Is it enough?
So as I go back to the conversation that I was having, like just before that particular statement that I made, that one is being frugal. Second is being smart with respect to investments. Yes. Right? So if you are like some of my techie friends who are just putting money in FD all the time, it may not be enough, because that is not the only way or the best way to invest in the market in terms of maximizing your returns. Right. So I need to have a sufficient big nest egg, which means that I need to have a mix of various instruments. which includes FDs. I'm not saying should not be, there should be a portion of that, but you should have exposure in the equity markets. There are physical markets like gold or real estate or whatever. So you should have a good mix between everything. In fact, if you take, Warren Buffett, everybody talks about Warren Buffett and what he keeps saying, and the book he talks about the most is this Intelligent Investor book.
Yes.
The first chapter of that book or first few pages of the book talks about never have 100% in a single instrument. You should not have 100% in an FD, at the same time don't have 100% in equities as well. It's about the right mix, right? And if you are able to do it consistently, let me tell you, in 5 to 10 years, you'll be financially safe.
Yes.
Right? I think one of the biggest fears that I keep hearing from people is, can I ever retire? Will I have enough? By being frugal and investing in a smart manner, let me tell you, in 5 to 10 years, you can be in a situation, you're financially stable, you're comfortable, and you'll be able to, maximize your returns, have a nice day, take care of your children. All that can be taken care by taking these small steps towards your financial freedom.
So how do you stay updated on the latest trends in financial market?
So in fact, I ask all my clients also to consistently be aware of what are the big news that keeps happening, which includes there will be an repo rate change.
Yes.
There can be what US markets are doing,
Yes.
or what is happening on the tech side, non-tech side. Just being aware of, at least reading, if not Economic Times, at least go to economictimes.com online. Just browse to some of the news. Right, that helps you to understand what are the trends that are happening in the market. Other thing that I ask them not to do is daily tracking their stock returns. Every day, today it went up 1%, your column is Suhas, it's up 1%, it's down 1%. Those things, those smaller fluctuations do not really matter.
Let's talk about stock market. So what are the key considerations to keep in mind when investing in Indian stock market, and how can individuals make informed investment decisions and manage risk while investing in stocks?
Stock market, right. So again, one of the biggest fears is the volatility you spoke about some time back.
Yes.
Market goes up, market goes down. How do you really manage such a situation? And should you directly invest in stocks? Should you go through mutual funds? Should you go through index funds, active, passive? There are hundreds of stories going out around, and people are really confused. What do I really need to do? If you look at the larger companies like Infosys, Reliance, or any of these bigger stocks, they will never go bankrupt overnight, right?
Yeah.
So for a person who has never ever invested in the markets, etc., the simplest advice that I would want to give to them is just invest in some what you call as index funds, right? Don't have any idea, just invest 5,000 you have, invest 5,000 every month in index fund for 1 year. This is index fund for a Nifty index, or basically invest in the top 50 stocks in the country, which is Reliance, Infosys, and so on and so forth, right? That is in terms of, for who have no idea. Other thing people ask is, should I time it? Should I invest on the 10th of the month, 15th of the month, 30th of the month?
It's too soon, right? To monitor the
return? No, not monitor the return. I'm saying, when should I invest?
Yeah.
I told you invest 5,000. When should I invest 1st of the month, 10th of the month, 15th of the month? There is a wonderful study that was done by one of the top B schools. What they studied is, let's say you are the luckiest investor. You invested all your money on the day when the market is the lowest in the month consistently for 10 years. Then the other fellow is an unluckiest investor. He invested in the market of the highest for like 10 years. Other fellow was a consistent investor. He kept investing on some particular day of the month, but every day, every month on the same day. The return, obviously the luckiest investor will get really great returns, but the unluckiest investor also will get like poor returns. But the consistent investor was very, very close to the luckiest investor, which means instead of like whenever people say, I want to time, don't time. Regularly invest on any, which is lucky day. What's your birthday is 20th? Please invest on the 20th.
Okay.
It's your birthday, your lucky day. You invest on whatever is lucky for you, but do it regularly.
I'm also a new investor.
Mm-hmm.
I just started investing, but index fund is something which I'm yet to explore. So I will definitely go back and look for the index funds and how to go and how to invest in those, and consistency, like you said. I think most of the people, they start investing, but बीच में break आ जाता है कि अभी पैसा डाल दिया side में, अभी it's fine, we'll see after 6 months. I think that's another challenge.
That is another challenge that happens, absolutely. And for more experienced investors, or if you are already investing in index funds and all of that, then you can think about stocks. And also a lot of them think about futures and options, trading and all of that. I would suggest a regular investor to try to avoid doing that. The reason I'm telling to avoid going for, I'm not saying you cannot make money. I have made money in futures and options, but that doesn't mean I advise my clients to do that. No. Why do I do that? Because today's world, there is high frequency trading that happens. Algorithms are trading. We have big companies like Goldman Sachs and like big organizations who have engines which are running algorithmic trades on futures and options and all of that. A lot of times you will end up missing out And I know people who lost lakhs of rupees because it's leverage trades. I think we were discussing leverage in the context of home loan, in the context of a credit card loan.
Yeah.
In case of stocks, the same leverage or whatever the loan bit is what, is something like going for an futures trading, right? And that is where, people are okay to, being in stocks. But once you are in either in the options or the futures market, there's much higher risk of losing money. So if somebody tells me I'm trading in stocks, I'm still happy. But if somebody tells me he's trading in options, I say, boss, be careful. Because that is where I have seen people losing tons of money. And in stocks, it's okay, Stocks will go up and down, it will not suddenly go to zero. But in options, there is a huge risk of that happening. So that's something that I would suggest people to advise, especially people who are new in the markets. And people who, to start with index, but people who are in the middle can try index, then look at, other kinds of mutual funds. You can go for stocks and all of that. It's a general progression, but don't reach to the last end of the spectrum of options.
Okay, so let's talk about investment best practices. What would be your tips for our audience who's watching the show today?
One of the things that you're not supposed to do is have all of your eggs in a single basket. For example, let's say I know that this particular company stock is really hot and I invest all my money there and suddenly the stock falls 5%, 10% in a day. You'll be in trouble. So never ever have all your eggs in a single basket.
Thank you so much for the tips. I think it'll be very beneficial and fruitful for our audience also, and me also. I'm gonna use your advice next time when I'm going to invest. So moving on to the most exciting part of our podcast. It's called rapid fire. You have to answer very quickly. Okay. So first question is, name 2 stock market books you recommend.
First one is The Intelligent Investor and One Up Wall Street.
Okay. Name 3 stock market influencers you admire.
Rachna Ranade, I think, does some good videos, as I can remember. That's the only one name that currently comes to mind.
Okay, sounds fair. Name the most important trait required for stock market success.
Trait required for stock market success is being equanimous, which is, not getting too perturbed when the market falls, or not too joyous when the market goes up.
Okay, and that's the wrap. Thank you so much for joining us today, and you have answered all the questions so passionately. So thank you so much.
Yeah.
Would you like to add something for our audience?
I think as just to close off, I would want to say, responsibly invest in the stock market, and I'm sure that all the wealth that you want to generate will be generated.
Thank you so much, Suhas, for joining us today and making this conversation so much fun and interactive. We'll be back with many more episodes of Paisa Bolta Hai. Till then, stay tuned.